continue. So we're going to be recording tonight. If you want to go back and rewatch this, you can. Or if someone has missed this, they can go back and rewatch it. We'll be posting it on our YouTube channel, and I'll be sending that link out in the recap email this week. So we're going to pass it over to Dr. Tori Griffin. So you got your doctorate this year, right?
I did.
Yes,
I graduated in December.
Congratulations. So 2022. Oh, yeah, it's 2023. Goodness gracious. But yes, congratulations. She is a specialist here with the Center for Farm Management, right? Yes. And she's going to be talking today about understanding financial, and I'm going to go ahead and mute, understanding financial statements and tell you a little bit more about herself. Just make sure if you've got questions, put them in the chat box. We'll be sure to get them answered. Make sure you stay muted so that we can hear Dr. Griffin as she goes through her presentation. Thank you for being here with us tonight.
Absolutely. I'm going to go ahead and share my screen to make sure that just because you have a doctorate does not mean that you know how to work technology. So let's see here. Taylor, can you see my screen?
Yes, I can.
Perfect. So yes. So as Taylor said, I am Tori Griffin. I'm a farm management extension specialist. Just to give you a little bit of background about me, I am from Middle Tennessee, Trousdale County, Macon County area. I grew up on a cow-calf and tobacco operation. And as Taylor said, I finished up my doctorate from Oklahoma State University in Ag Econ. And also, so I know that my title on my Zoom, and I realize this as I'm talking, also says Tori Marshall. I also got married in December, so it's been a little bit of a hectic time for us, but very excited to join y'all. When Matt asked if I could speak to y'all during Farming Fundamentals, I said absolutely. I enjoyed getting to speak last year to the group that joined them in Williamson County. But for my goal for tonight is just kind of talk on the financial side. So I know that in Farming Fundamentals, you get a little bit of both, the best of both worlds, production and financial information. But tonight we're going to talk about the importance of developing financial statements and why it's especially important for us who are in the development stage of our operation, or we're looking at expanding and we're beginning and starting out. Financial statements and being able to understand where we stand on that aspect is extremely important for us as beginning farmers. So one of the reasons why we always look at and say that we need financial statements is they're a way to measure our financial performance. And so another little bit about me is that I'm a sports guru. I enjoy sports. I enjoy watching them. I played them in growing up, some in high school, but I've enjoyed them my whole life. And I got to do this in-person presentation in Dixon County last week. And I kind of threw this up on the screen and asked them what this was. And several of the guys in there, they said baseball. And then some women go, no, those are football. So I was kind of shocked by that was how that which ones knew what I had thrown up on the screen. But so in sports and athletics, we think about statistics, and they're always statistics. Athlete statistics are always tracked from game to game. And if we throw this up here, so I've thrown these stats up from 2013. They are for, of course, Peyton Manning. That's who I chose for this, obviously, because we're UT. We've got to throw up a UT athlete and one that's well known. But his statistics year in and year out were always tracked. And what his statistics do is they allow him to see where he's been, how he's improved, where he's going, and what he can improve on for his next game, for his next season. But something else that these statistics do, Peyton Manning's not the only one that his statistics are tracked, is it allows us to not only look at where he's been and what he's doing, but it allows us to also compare him to other quarterbacks in the NFL. We can compare him to Brady, Aaron Rodgers, Ben Roethlisberger. We can do that and see, okay, where does he line up amongst all of these other athletes? And so where I'm going with this is that's exactly what tracking and measuring our financial performance can do. We can't manage what we don't measure. And that's the same thing in the sense of athletics. If they weren't keeping track of their completion rates, how many times they were sacked, how many strikeouts they got in baseball, they wouldn't know where to improve. They wouldn't know where they fell in line with other athletes in their field. And so that's exactly what measuring our financial performance allows us to do, is it allows us to manage what our operation is looking like, what we're doing, where we've been, and where we can go. So that's why it's important to have this gauge of our financial performance for our farms. So what's the purpose? So now we've talked about why knowing what financial performance is important and why we need to know where we're on that. But what do financial statements do? Well, so I give this example. I was trying to think of another analogy to think about this, to relate it to us in everyday life. When we go to the doctor for our annual checkup, typically they're going to run some tests just for an annual evaluation to see how we're doing. And I always like to give this example for myself. So I was in undergrad, I went to Tennessee Tech, and I went for an annual physical just to see, hadn't had one in several years. And I went and they ran some blood tests and checked everything, and they got the results back, and my cholesterol was out the roof. And this was as a 21-year-old, no real reason that my cholesterol should have been as alarmingly high as what it was. So then they started asking me about my diet. Well, come to find out at that time, a little bit different than today's current times, eggs were really cheap. And I was eating hard-boiled eggs, I was eating scrambled eggs, I was eating omelets all day, every day for breakfast, lunch, and dinner. And I had raised my cholesterol out the roof. And so what that did, having those tests, being able to run those and evaluate me, gave them an indicator of my health and let me know how my overall body was performing, and we were able to manage that. Well, that's exactly what financial statements do for us. Financial statements provide an indicator of our financial health. They let us know what's going on our farms, and just like looking at our overall financial performance on learning how we can improve and change, financial statements also give us indicators, and they help inform us on making wise decisions. And so when we're thinking about our financial statements, they can help us determine if we're row crop producers, whether we want to do soybeans versus corn. This year, a lot of producers are asking whether they switch from cotton to corn this year, given the high input prices that we're seeing for a cotton crop this year. I think it's safe to assume that none of us have unlimited resources in this world, and none of us have that. And so by having financial statements for our enterprises and looking at each enterprise as an individual assessment, we're able to make sure that we're redirecting our resources to the most profitable parts of our operation. You know, Tennessee, we're known for having diversified operations. We want to make sure that the overall operation is being profitable and that we're not putting money into one of our enterprises that might be in the long run hurting the long-term success of our farms. Something else that financial statements can do is, right now, we're in a high interest rate environment. Financial statements, they allow us to look at whether or not making a new investment, whether that's machinery or land, putting in the money for that loan. They allow us to be able to see if we're going to be able to cash flow this. Is this going to be a risky investment for us? Is this going to hurt us as far as what some of our financial ratios are? And we'll look at some of those later on. But that is the goal, and that is the purpose of financial statements, is they're that indicator of our financial health, and they help direct us and make informed decisions for our farm. And so that's what we're going to look at tonight. That's where we're going to go with this. And we're going to look at balance sheets and the information that we can gain from a balance sheet. First of all, we're going to look at what goes into one and what exactly we're trying to capture in one. And then we're going to look at an income statement. And we're going to be able to know what exactly the difference is between them, what they measure, and how we can use them to know what our overall operation is, where it's going, and how we perform and how we move forward. So the first thing that we're going to look at is the balance sheet. So balance sheet, it has three components to it. The first one is the assets. This is any resource with economic value to it. And we're going to break this down, but this can be anywhere from our livestock to equipment on the farm to our land to fencing supplies that we may have in the barn that we've not yet used yet, but we've already bought it and we intend to. Anything with an economic value is considered an asset, and it needs to be placed in our balance sheet to understand the overall health of our operation. The next thing is liability. This is any debts owed for the farm. A lot of people, just to get an overall idea of where they stand, some will put their personal loans in there just so they know where they stand. Some keep it entirely separate, personal loans versus farm loans. That would be completely up to you and what you would want to put in your balance sheet to see the health of your farm and what your family farm looks like. But when we take liabilities and subtract that from our assets, when we get monetary amounts for each of these, what that leaves us with is our equity or our net worth, our value of our owned assets. And so these three components, we're going to break down each one of these and how we figure each of them out. So what a balance sheet does is something to point out the difference, and we'll look at the difference between this and an income statement. But the balance sheet looks at one point in time. So if you and I sat down today and we worked out a balance sheet and we came to an agreement of what this balance sheet looks like, it could very easily change tomorrow if you decide to sell a piece of equipment or you decide to purchase a new piece of equipment. Your balance sheet can change day from day. Does it normally? No, it doesn't. But the point is that what it summarizes is one specific point in time. A lot of producers, so right now as a farm management specialist, this is what is considered our busy time. We'll sit down with producers, and sometimes producers, they want that, what is my balance sheet as of December 31st of 2022? And so we'll sit down and we'll do that of what assets they had as of December 31st, and then what debts they owed as far as that. And we'll come out to figure out what their net worth or their equity is. So that's very important to understand a balance sheet, that it is one specific point in time and what your financial position is at that specific time. So what exactly does a balance sheet measure? That's the next question we want to ask. So balance sheets measure two things. The first one is liquidity. Simply, liquidity is just how quick can I get my hands on cash? If there's a hiccup in whether that's my personal life or a hiccup on the farm, how quick can I cope with that unexpected financial need and get my hands on that cash to be able to take care of that problem? That's our short run ability to meet financial commitments. So that's what liquidity is. Solvency is, if we looked at this and we look at this, that solvency is the long run ability to meet financial commitments. And what this is if we decided today, let's say we're all seasoned producers and we've been in this for a while. If we decide today that we want to sell everything on our operation, all of our equipment, maybe our land, maybe just our equipment. If we're livestock producers, our livestock, if we want to sell everything today and pay off all the debt, where would we be? Could we end up paying off all the debt by selling all of our assets? This is what solvency is. This lets us know where we are for the long term, is if we're able to meet financial commitments in the future. So those are the two measurements that balance sheets provide us with. And we have different ratios and different analyses that we can look at to measure both of these. So what goes into the balance sheet? That's our next part that we want to talk about tonight. And if for any reason, if Taylor, if I miss something or a question or something, or somebody has a question and I don't see it on there, send a shout out to me, just so if somebody has a question so we can answer it in the moment.
Yeah, I'll let you know if one comes through.
Okay, perfect. That sounds good. I just got to thinking about that. I know sometimes this can be a lot. Sometimes it's old news for people. Some people are on top of it and they know exactly what to put in here, but I don't want to miss anybody's questions.
Yeah.
So the first thing that we're going to look at is this balance sheet. So we've got, as we've said, we've got our assets and our liabilities. And let's see here. Let me go back to my screen. There we go. So first thing we're going to look at is our farm's assets. And more importantly, we're going to start off with current assets. So what current assets are, the easiest way to think about this is your cash and checking accounts. Current assets are going to help us measure our liquidity. How quick can we get our hands on cash? Anything that is considered a current asset is, as we've said, cash and checking accounts, but it's also any type of asset that we can sell that's not going to stop the normal business of our farm. So we'll look at non-current assets here in a second, but if we're thinking as cattle producers, if we're selling our calves, if we're a cow-calf producer and our goal is to produce feeder calves to sell when they've been weaned and they're ready to go, either to a backgrounding operation or to a feedlot, selling those calves is not going to stop or put a halt on our overall business. Our goal is to produce those calves and sell them. So by selling them, we're not stopping the typical day-to-day operation of our business. So they are considered calves intended for sale, but not sold. They are considered current assets. Another way to look at this is for row crop producers is stored grain. So we know that for Tennessee row crop producers, normally if they store their grain past typical harvest season, they can receive premiums for their crop, for their grain. And so stored grain becomes a current asset. If they've stored it they've harvested in October and they've waited to sell it till December, that grain that they have in storage is considered a current asset. They could sell it and it not put a stop to their normal and typical business of row crop farming. Other current assets, these include anything in our barn. So I mentioned fencing supplies. If we bought everything that we need to put up some new fence, we purchased some new land and we want to put up some new fence and we've got it sitting in the barn waiting for us, that is considered a current asset. If need be, if we had to sell it, we could sell it. So hay, fuel oil, supplies, tools, anything that has a value that can be easily sold and not stop our day-to-day operation, that's considered a current asset. Prepaid expenses. Some people right now have already locked in their seed and fertilizer for the upcoming year, whether that's for their pastures or whether for row crop producers. They've already locked in those, and those are considered current assets, is our prepaid expenses. Another one is, so I'll give you an example for our operation, for our farm back home, is we would sell hay. And accounts receivable, revenue for a product that's been sold, for which no payment has been received yet, this is considered a current asset. You should be receiving that cash or that check at some point for the revenue or for what is owed to you. This is any type of custom work. If you do custom spraying, selling hay, bush hogging, anything like that where you are doing work and somebody owes you money, that is considered a current asset. Now, the non-current assets, anything that we've just discussed that we didn't discuss goes into the non-current asset. And you'll see here for non-current assets, we have two different categories, cost and market. And we're going to break those down and talk about each one of those as well and what goes into both of those. So non-current assets, as we've said, another non-current assets have a useful life greater than 1 year. But the main thing to remember about this is non-current assets is selling this is going to disrupt our business. So for example, let's go back to that cow-calf operation. If we've said that selling our calves, the ones that our goal is to produce feeder calves, that's what we're intending to sell on our farm, selling those isn't going to stop the day-to-day business for our farm. However, selling if we've got 20 cows and one bull, selling our one bull, that's kind of going to put a halt on our cow calf operation. We're not able to breed those cows when they come into heat. We're not able to produce the calves that are ready to go to market after weaning. So that's going to disrupt our day-to-day operation for that cow calf farm. That is considered, breeding livestock is considered a non-current asset. So we're going to talk about now the market value versus that cost or book value. And so market value is fair market price. Book value is the value of that asset less depreciation. And the best way to give an example of this is the current market for vehicles. So we all know right now used vehicles, if we're looking at trucks, let's do an example of a truck. You know, we may be able to, we've got a used truck less than 100,000 miles on it. It's a we'll say a 2010. We could very easily potentially get 30,000 for it, if not more. I don't exactly know where the used car value market is right now, but I know that it's still exceptionally high. Fair market price is we could get, in current market environments, we could get 30,000 for that vehicle. However, if we look at what we paid for it, the value of that asset minus depreciation, and this reflects the decrease in value from being able to use that truck that we've used, is if we take book value, it may only be worth 7,000. So it kind of, you know, we recommend considering both, but if you're looking at the overall health of what you could get if you did have to sell assets for your operation, looking at the market value, what you could get for your equipment, for your vehicles, for your land right now, that market value is exceptionally important for us. Both are important, but that market value, we recommend looking at that. But one thing about that, and I'll point this out here, I mentioned land, is that sometimes including land in our balance sheet, and if we do a balance sheet every year, we know that land values are going up. We know that. Cropland value right now is about 5,000 an acre for Tennessee. It's up over a little 10% over last year as far as land values go. So we have to be careful about each time that we raise that, because we can kind of get that altered appearance of what our overall financial health is if we've got a lot of assets in land. So we do say to be careful on that, but we also want to make sure that we are including that, because if we own land, that is very much an asset to us. So the next thing, so we've talked about our current assets, just kind of a recap on our current assets is those are anything that we can sell, anything that has value, that if we sold it, it would not put a stop on our normal business operation. Non-current assets is anything, if we sold it, it would kind of put a halt to our normal business. So again, back to the cow calf is current assets, selling our calves. Non-current assets is selling our bull or our mama cows. But now we're going to go on to our farm liabilities. So remember, liabilities, any debt that we owe. So we're going to look at two different types of liabilities, very similar to our current and non-current assets. Current liabilities is any obligations that are due within 1 year from when we are looking at this balance sheet. So this is any principal and interest that is due on loans within the year. This is, and we'll look a little bit more here in a second. Non-current liabilities is anything that is due after 1 year from the date on the balance sheet. So current liabilities is any expense that's been incurred but not yet paid. So feed purchases, your co-op bills, 60 to 90 days, that is a current liability. As we've said, accrued expense, interest on a loan, and property tax. Right now in the high interest rate market, we're paying a lot more in interest than we have in previous years. And we've got to be exceptionally careful about that, because those interest expenses can really creep up on us when we're looking at our overall cost of production for our operations. Previous years, we may not have been hit that hard with that interest expense, but these years right now we're at 7.75% for the interest rate, that can sneak up on us pretty fast right now in this current environment. And we need to be aware of that, of what we're actually going to be paying in interest and principal for this year. Non-current liability. This is going to be principal on our loans for land, machinery, breeding cattle, buildings, anything that basically falls into that non-current asset group, things that if we sold them, that we're going to kind of put a stop to our normal business operations. This is typically going to fall into a non-current liability stance as well. So we've talked about what a balance sheet is. It measures your financial health at one point in time, your financial condition. We know that it measures liquidity. How quick can we get our hands on cash? And then it also measures solvency, is what do we look like in the long run? If we sold everything today, where will we stand as far as our debt goes? So we can take that balance sheet and we can answer several different questions with this. It can give us several different ratios to look at. And these are just a few examples of what a balance sheet can tell us overall about and be that financial indicator of our health for our farm. So these are some questions, I had done this presentation several times before, and I had thrown up all of the equations, all of the analyses that we can do with this, and it was just kind of cumbersome. So then I started trying to figure out a better way to look at this. And, there's several questions that we want to know that it's important about our farm when we're thinking about getting into an agricultural enterprise. And so these are just some questions that I thought of that, these are key things that we want to be able to answer. And so the first one is, if I paid off all debt due this year, how much in current assets do I have left? So remember, our current assets is things like our cash and checking accounts. And how do we answer this question? Well, we use the measurement of our working capital. And that's our total current farm assets minus our total current farm liability. So any of our debts that are due within the year. And the higher the working capital, the better we are. The more than likely that we're going to be able to make this operation with our loans, with our expenses. We're going to be able to make it actually cash flow, that we're going to be able to bring a little bit of maybe some income in for our operation, or more or less a profit. So that is the question, that the working capital, that's how we can answer that question, is with working capital analysis. The next one is, what % of my farm is owed to creditors? So that's extremely important. So because that lets us know if at any point we want to take on another loan, how risky is that? How much are we a risk to creditors? And we can answer this question with our debt to asset ratio. And that's our total liabilities. So that's everything that we owe, not just what's due within the year, but all of our liabilities. Maybe the 15-year term that we have on farmland that we've purchased. But it also includes, we take that and we divide that by our total farm assets. And so our debt to asset ratio, what we want to see with that, the lower the ratio, the better we are, the less risky we are to creditors. And so typically we prefer to see, creditors prefer to see a debt to asset ratio. They say you're in a strong position if less than 40% of your assets is owed to creditors. They say that if you're 70% or greater, you're in a vulnerable position. So that's a way that we can answer this question of what % of my farm is owed to creditors. This indicates are we able to make those new investments, take on those new loans? Where are we at as far as our debt to asset ratio goes? The next one is, what's the proportion of my current assets to my liabilities? And so this is our current ratio. And so this one measures our liquidity, is that if we hit a bump in the road, do we have enough current assets? Remember, those are ones that we can easily sell to get cash. This is what's in our checking accounts. Are we able to, if we hit bumps in the road, if we had to take out a little bit more money than we planned, or something broke down on the farm, how liquid is our business? Are we able to cope with those short run abilities to meet financial obligations? And so with this, the higher the ratio, the more liquid the business. And so what we typically like to see is this is a 1.7. So that would mean for every dollar of current liabilities, for every dollar we owe this upcoming year, we have $1.70 in current assets. So that's what our current ratio tells us, is how can we easily cope with any financial hiccups that may happen on our operation in this upcoming year. So these are just a few of the types of questions that a balance sheet can answer for you. There is hundreds more that we can look at, but the point of tonight is not for you to remember all of these different ratios, all of these different analyses, all of these different types of questions that can be answered. But the point is for you to understand is how important it is to have a balance sheet for your farm, so that you know where you stand when you talked with people, when you're meeting with people, when you're potentially writing business plans for your operation. Business plans, they're going to want to be able to see what your financial position is. And really, they're going to want to see things like this balance sheet, a farm plan for your operation. So as I've said, the goal tonight is not being able to know exactly each of these ratios, but it's to know how important it is for each of these statements. So we've talked about our balance sheet, and now we're going to talk about our income sheet. And so what an income statement is you all know this. This is probably nothing new to any of you tonight, but an income statement is the value of our products and services produced, whatever our output is for our operation. I'm sure that we have a really diverse group tonight in this program. We may have some livestock producers, horticulture producers. I'll say livestock cow calf, small ruminant, anything in this matter. We may even have some people who are looking at row cropping. You know, we've had several people that have looked at that this past year, getting into row cropping. They've inherited some land from their family and they want to start that. So regardless of what it is, revenue from the output you are producing. And then we take our revenue and we subtract expenses from that. Any cost incurred in the production of that output. And that tells us whether or not we have a profit. And I have just a profit here, but this could very easily be a loss as well. So expenses subtracted from revenue, we'll either have a profit or a loss at the end of this income statement. And the difference between an income statement and a balance sheet. So right here, we've got this example. And what this is that an income statement shows over a certain time period. So where we may create a balance sheet that was prepared on January 1, and that is what our financial position is with that balance sheet there. An income statement is going to track this entire time across from January 1 to December 31st. If we wanted to, we could put a balance sheet on January 1st, and that's where we are on the 1st. We could do it on July 1st, and we've got a balance sheet there. And then we could do a balance sheet on December 31st. And we've got 3 different balance sheets for this one time period for an income statement. So that's the difference between an income statement and a balance sheet. Is a balance sheet is going to show all the revenues and expenses across an entire time, across a whole time period, where a balance sheet is showing that one position in time. As of that date, where are we? So similar to our balance sheet, we're going to break this down step by step and look at each category for this. For cash revenue, this is going to be anything earned during that accounting period that we are producing from the farm. This could be sale of livestock, sale of grain, sale of cut flowers, for example. Something else that's going to go into this is government payments. The last few years with COVID-19, with trade wars that have persisted in previous years, we have seen several government payments come out. Those are counted as cash revenue for operations. What this doesn't include is off-farm income, sale of land, gifts, anything like that. Off-farm income goes into a different area. It's other income. So when we create, so this is simply looking at what revenue is coming in from the actual farm. So that's our cash revenue. Now our expenses, again, all cash expenses, anything that we have put in to produce that output, regardless of what it is, fertilizer, fuel, labor, chemicals, anything, custom hire work, insurance, utilities are going to go into this. Even if, you know, your utilities are combined with your home, with your personal bill for your home, still a percentage of those utilities needs to go towards the operation if your farm and your home are tied together as far as utilities go. So this is any type of expense that is associated with the output of our farm. Net cash income, cash revenue minus cash expenses. That is where we see whether we're making a profit or a loss right there on the cash side. So now we're getting into this over here in inventory changes. And what this does is this is accrual income adjustments. And the reason why we have this separated out from cash is because what this is going to do is it's going to connect our revenue and expense to the year it was produced. And this is how we get, so we just talked about, we got our net cash income, which is our cash revenue minus our cash expenses. But now we're also going to get the net farm income from operation. So this is that net cash income plus our depreciation plus total inventory changes. And that's where this accrual income comes in. So the main difference between these two is simply just when the income and expenses are recognized. So cash accounting, it's recognized whenever that income comes in as cash paid or cash received. Accrual, what it does, it creates this assets of accounts receivable. It ties it to when that output is produced and can be sold, when we are able to actually physically earn that money. We may have not earned it on the cash side yet, but we can if we so chose to. And expenses, when they're incurred. So it creates liabilities such as accounts payable. So we may not have actually been charged to us yet, but we've created an accounts payable where they will be at some point. We've created a liability with it. So the best way to give this example is looking at this from a cow-calf operation. So our 2022 calf crop, this past year. So let's say we typically market our calves in September or October of 2022. Well, instead of last year, cattle prices right now, they're going up. Herds are liquidating, supplies is shrinking, cattle prices are going up. We've decided to hold on to our 2022 calves and background them until this month of this year. So what that does is, if we look at this just from a cash accounting standpoint, we have no cash revenue in 2022. We haven't received any cash until now, this month of 2023. So that's no livestock income for 22. However, so let's say that we've sold them this month. We sold them, well, let's say we're going to sell them this Wednesday. So we've sold them this Wednesday. For some reason, some black swan event has happened, and for some reason, prices have dropped this summer. We don't decide it's not worth us to background this 23 calf crop that's getting ready to come in here in the spring. So we go ahead and sell them in October like we typically do. What that does on a cash accounting system alone is that tells us that we've got 2 cash sales for cattle in 2023. And we had none for 2022. Accrual income adjustments, it ties those 2022 calves back to that 2022 income statement. So what it does is it says you could have sold them, you chose not to, but you could have sold them. So therefore, we're going to put the income back into 2022 versus having 2 sales for 2023. So that is the main difference between cash versus accrual accounting. So now we've talked about our revenue, We've talked about our expenses. We've talked about the accrual income adjustments. Now we're going to talk about this gain or loss on sale of capital assets. So some years we're going to decide to sell machinery. Some years we're going to decide to sell certain types of equipment, maybe even land. What we have to do is that when we sell that, the sale price could be either less or more than the cost value. And so what we have to do is we either have to create a capital gain or a loss for our net farm income. So we're either going to take our net farm income, and if we sold it for more than what we paid, we're going to create a gain for loss of capital asset. And then if we the opposite, we're going to create a gain for it. So we have to make sure that we're accounting for that gain or loss on sale of capital assets in our overall income statement. So with that being said, where do we start with this? This is a lot of information. We know about a balance sheet. We get it's important. We get that we need an income statement for our operation when we're bringing in revenue and having expenses. Where do we start with this? Where do we go with this? So UT Extension, the managed program, the Ag Econ department, all of us, we kind of come together. And these were actually created before I even started. So really they came together and they created these input forms. And I'm happy to send these on to Taylor and Matt if they want us to email these to all of you in the group, or if y'all do have any in-person classes, print these for you. I'm not sure how the program's working this year, but these are input forms that you can print off, and they help develop your balance sheet. There's some to look at your family living expenses, and that is where the managed program comes into play. This is what we're here as farm management specialists to help with. And so what we can do is we can sit down. So everything that we've talked about tonight is kind of reviewing your current financial position. That's what we're here to do. If you want to fill out those forms, contact your local county extension agent and say, hey, I've done this, or I heard this farm management specialist talking about this. Can I get in touch with my local farm management specialist, depending on where I am? They'll get you in touch with us. We can help you either fill out those forms, or you can have them already filled out and go, I want to look and see what my balance sheet, I want to do a farm plan. We can put that information in. We've got programs that are able to do that and look and see where you stand and analyze your overall farm and see where you are. If you're wanting to evaluate investment opportunities, we can create an individual visualized farm plan for you. Does it cash flow? Can we make it work? Is the investment worth taking on? What does it look like from the debt to asset ratio? What are your options as a beginning farmer? And that's really what we as farm management specialists are here for. You've got awesome county ag extension agents. You've got awesome county extension programs in general, regardless of what program they may be in. They're there to help on your production aspects, the production side of your operations. We as farm management specialists, we're here to help on the farm financial planning side. That's what we're here for, to help you develop business plans, look at your financial positions. That is what we're here to help you explore your alternatives. And so with that, I know probably by the end of this was a lot to take in, especially I didn't realize this was just the second class of this program. I know that's a lot to take in, and you're probably feeling like this little guy here sitting on the question mark right now of, I don't even know what I should ask or where I should go with this. But if you have questions, please feel free to reach out to me, your fellow farm management specialist. Any of us are here to help. We're here to answer any questions you might have. Please feel free to give me a call. This is my cell phone. That's a lot easier right now to contact me on. Given the time of year, I'm not in the office a whole lot right now, but please give me a call if you have any questions. Send me an email. I am absolutely happy to help. With that, I will see. I'll stop the share and see if there's any questions.
Thank you for that, Tori. It was wonderful. Are there any questions, anyone?
Like I said, I know that's a lot, especially on, I didn't realize this was the second night of this program.
Yeah, it's a lot taking the first few classes.
Yes. Who did they have speak the first night?
It was just an introduction. It was Matt and myself. We
Oh,
talked a lot
bless.
about-
This is the way to start the program. Okay.
you're ahead. You are kicking it off.
Bless
You're
them.
bang.
Oh, me.
Are there any questions, anyone? You can put them in the chat box or unmute yourself. We even have some repeats from last year, so they came again.
Okay.
They wanted
okay.
all that good information.
I was gonna say, oh me, they didn't run the first time when they heard this presentation. Oh me, okay.
Yeah. Well, if there aren't any questions, yes, lots to take in. That's what they're saying in the comments. Lots to take in. You just given them so much to think about. And I'm sure questions will come later. So yes, Tori, if you want to send those sheets over, those forms, we'll get them out to them. And then any questions y'all have, you can send them my way and I can get with Tori and help get those answered, because I know this is definitely not my area of expertise at all. So I'm glad we have someone like you here that can help answer those questions.
Absolutely. And that's I know that this is a lot, regardless of whether this would be the first night or the last night to take in. And it may be an hour from now they think of a question. And if that is, please don't feel like you can't send a question. If you've got my phone number or email, any of those, please send a text going, hey, I watched this. What in the world did you mean by this? That just completely lost me, and I've just now figured it out what to ask.
Yeah,
yes.
we'll do that. Got a lot of comments of great info. Thank you. So we really appreciate you being here tonight, Tori, and congrats on the nuptials and the doctorate all in the same month. You're just
don't recommend it. Do not recommend all that.
I can't imagine the stress.
Don't recommend it. But thank y'all so much for having me on tonight. Enjoy it. Always enjoy getting to speak to the Williamson County Farming Fundamentals group. Absolutely.
Yeah. Well, all right. If there are no questions, we'll go ahead and end for tonight. Thank you all for being on. And thank you again, Tori. It was wonderful.
Absolutely. Y'all have a great night and feel free to send those questions at any point.
We will. Have a good night.
Have a good night. Bye.